Hello, and welcome to this session of Day 4 of Blockchain Week. In this session, our panel will be discussing crypto assets, a perspective from financial markets and our conduct regulators. We're joined by Mark Adams. He's the Senior Executive Lead, Strategic Intelligence at Asic. Nathan Bourne, the Senior Executive Leader, Market Infrastructure Asic, and our moderator, Cathie Armour. She's the Commissioner at Asic. Over to you, Cathie.
Thank you very much, and thank you to Blockchain Australia for hosting this terrific week of discussion on digital assets and the future opportunities for all of us as we develop and apply this new asset class in our communities. I'd like to begin by acknowledging the traditional owners' ongoing connection to and custodianship of the lands on which we're all meeting today, and to pay my respects to elders both past and present. Now, today you're going to hear from three speakers from Asic, and before each of us starts our discussion, we'll briefly introduce where we fit into the world of crypto assets. The session is planned to be 60 minutes long, but don't worry, we don't really want to speak at you for that long. We're going to each provide some remarks on discrete areas of interest from our perspective at Asic, and leave a decent amount of time for us to have a little bit of a discussion amongst ourselves on questions which we hope are of interest to you. So let me start. I'm one of the commissioners at Asic, and in my role as a commissioner, I've been very focused on our regulation of financial markets, the operators and participants in these markets, and really ensuring how we go about ensuring the integrity of these markets. And I'm also lucky enough to work closely with Asic's Innovation Hub. Now, just to recap, you're probably all aware of this, but just in case not, Asic is Australia's corporate financial markets, financial services and consumer credit regulator. And our vision for our work is that there be a fair, strong and efficient financial system for all Australians. Our responsibilities include promoting the confident and informed participation in the financial system, and also to facilitate and improve the performance of firms in our economy. We regulate activity that falls within the financial services regime, and at times, because of the ambit of our regulatory remit, we end up impacting on activity that interacts with our financial system. Now, as you know, the financial system is really dynamic. And so we're administering laws that apply to markets and products that didn't exist when the Asic Act was passed in 2001. And I think crypto asset financial services are a relatively recent example of this dynamic system. Now, all week you've heard about the tremendous changes digital asset technology is bringing to the products and services that are important to all of our lives. The changes include the capacity to develop, distribute, trade and invest in crypto assets. Over recent years, a question that has certainly exercised our mind at Asic, and we know has been a focus for many of you, is whether the crypto asset you have developed, distributed, traded or developed a platform for is regulated under the financial services laws. Now, we tried to help out here by issuing information sheet 219, which describes the financial services regulatory framework for distributed ledger or blockchain technology, and information sheet 225, which describes how crypto assets may come within the financial services regulatory framework. And those information sheets are available on our website. Now, whether or not the existing laws for financial services need to be adjusted to reflect the rapid growth in the crypto asset ecosystem is a matter for government and ultimately for the Parliament. And I know on Monday you heard from Senator Bragg, who is the chair of the Select Committee on Australia as a Technology and Financial Centre, and also from Minister Hume, the Minister for the Digital Economy and for Financial Services, about the government's approach to crypto assets. On Monday, the government published a consultation paper called regulating the crypto asset ecosystem. And that outlines the government's proposed approach to licensing crypto asset secondary service providers and crypto asset custody requirements. Now, as you would know, submissions providing feedback and comments to the proposals in that consultation paper are requested by 27 May. And if there's one piece of homework from today's discussion, I think it is this. Please take the time, if you haven't already, to read the paper and to engage with its proposals. They are an important part of the response to the Select Committee's recommendations and will have an impact on the regulatory regime that does apply to crypto assets. At Asic, we intend to do this homework. We will be engaging with these proposals and thinking about whether there is useful input we as a regulator can provide to Treasury about them. Now, while the government and then the Parliament consider the important policy issues identified in the consultation paper and other aspects of the policy landscape for digital assets, ASIC's job is to administer the existing regulatory regime. Now, our focus has and will continue to be to adjust the work we do to reflect the rapid expansion in the crypto ecosystem. The consultation paper tells us that more than 800,000 Australian taxpayers transacted in digital assets in the last 3 years, with a 63% increase in 2021 compared to 2020. What does this mean for firms involved in crypto asset investment products? Well, inevitably it means that our supervision of you is intertwined with the supervision that we undertake for the activities of other providers of investment products. While many years ago, the first port of call for a firm developing a crypto asset-based financial product with Asic was through our innovation hub. Now, with the growing maturity of many parts of the industry, we anticipate firms with more established businesses or more established business models will engage with us in much the same way as established financial services firms. This means more and more we're going to be pushing you to have really developed ideas and firm legal foundations for your proposals. Of course, we will engage with novel proposals involving financial products and services, but I just want to be clear that when we're doing that, because we are keen to maintain our robust regulatory framework, the proposals often require time for us to examine them, and we need to effectively marshal our limited resources to do that amongst the other things that we do. So to help us facilitate novel proposals, we're really looking for industry to work closely with us at Asic and to do a lot of their own homework to navigate the details of the Corporations Act. Now, one of the significant market trends we've observed since the start of the COVID pandemic has been a surge in the interest of retail investors in participating in financial markets. We observed increased retail investor participation in the listed equities market in Australia, with retail daily turnover now accounting for around 16% of daily turnover, which was up from pre-pandemic levels, which were closer to 10%. Retail investor interest in other products, like, for example, contracts for difference, increased as well. And we've documented that these increases in some papers that we put out publicly discussing the use of our product intervention powers in relation to contracts for difference. This week, IOSCO, now IOSCO is the international grouping of securities and market conduct regulators like ASIC, released a consultation report of its group called the Retail Market Conduct Task Force. It's a public report, and I commend it to you if you're interested in having a look at a bit more detail. This report highlights the rapidly evolving retail investing framework globally. For example, in the United States, annual inflows in listed exchange-traded funds were 55% higher in 2020 than in 2019. The IOSCO report flags the increasing popularity of crypto assets for retail investors and describes this as a global phenomenon. I really have trouble pronouncing phenomenon. Anyway, and this increasing popularity clearly is driven by a number of facts, but the report attributes a couple of explanations. The ease of accessibility of crypto asset trading, 24-hour online trading, and the low returns from traditional asset classes. Now, the report flags that many regulators are seeing retail risks in crypto assets from fraudulent platforms and scams. Now, in Australia, this risk has been observed in the reporting that we receive at Asic from the public about possible misconduct. And it's been highlighted by our co-regulator in many respects in this area, the ACCC, in its ScamWatch reporting. ScamWatch figures show that in 2021, consumers reported losses of 99 million to cryptocurrency investment scams. Now, in response to the reports we've received, we've released a number of scam alerts to educate investors. And we urge anyone that has fallen victim to a scam to report it to their bank or financial institution first to see if there's any action they can urgently take, and also to lodge a report of misconduct with us, or to report through ACCC's ScamWatch. We know that bad actors often attempt to intentionally circumvent regulation, and exchange hacks and extended platform downtime can present cyber and operational risks that do have the potential to damage investor interests and the image of the crypto industry. I think educating consumers about crypto scams is a really important way for the industry to disrupt bad actors who seek to capitalise off the individual's interest in crypto assets. And at this point, I really would like to thank Blockchain Australia for the work it's done to provide scam education. There is a separate scam alert section on its website with links to information on scams, guidance on how to spot a scam, and links to how to report scams. Can I also have a plug for Asic's consumer website called Money Smart? That website also has a lot of information on financial and investment scams that you may find helpful to refer customers to. So the pandemic and lockdowns, coupled with low interest rates, have accelerated the pace of change in the market. And the technology underpinning these changes brings lots of opportunities and benefits. At Asic, we're really keen to continue working with the crypto and blockchain industry to understand the opportunities and challenges in the sector, and to help you develop investment products that will enhance the wellbeing of Australian investors. Our message is, please engage with the proposals in the Treasury consultation paper regulating the crypto asset ecosystem. Do the hard work to understand your obligations under the Australian financial services regime if your product is one that interacts with or participates in the financial sector. It's important that you identify and work with quality advisors who understand the regime and are used to working within the system. Help us at Asic to better understand your sector. We're very open to learning about how the crypto world works, including the opportunities and threats it presents. And please do what you can to campaign against and interrupt scams. Focus your efforts on educating your customers, and please let us know about crypto investment scams where we might be able to use some of our regulatory powers or our relationships with other regulators, both domestically or internationally, to take action against scammers. So with that, I'm going to hand off to Nathan Bourne now to continue the discussion. Nathan.
Thanks, Cathie. Cathie's run through a whole range of issues there for us to touch on through the discussion. First of all, my name is Nathan Bourne. I'm the Senior Executive for Market Infrastructure, and that normally handles the supervision and licensing for the infrastructure of financial services, so the exchanges, derivatives trading platforms, clearing and settlement facilities, benchmark administrators and the like. But my involvement here is due to an historical point that there was a lot of blockchain technology, DLT, coming through from the infrastructure lens. So we started building out some of our capabilities in that sense. And now we have a group of senior executives that where crypto assets are coming in and touching on our regulatory perimeter, we're involved in those pieces of work. So that sort of gives you a bit of an idea of how I fit in. I thought I'd just pick out a point that Cathie made, that crypto assets may or may not be financial products. And essentially, they need to be determined on a case-by-case basis. We normally see firms engaging legal opinions or legal firms to get an opinion on that as part of the potential discussions with Asic. So whether a crypto asset falls within our regulatory perimeter or not is subject to the specific characteristics of each product. And just one of the info sheets, excuse me, that Cathie would have mentioned is information sheet 225, to try and give a little bit extra information for firms that are looking at this. It is written in a slightly more layperson terms than, say, the legal text that we do have. But, you know, at the end of the day, legal opinions are important with some of this work. We do expect industry that have the best visibility of their products to ascertain the relevant Australian laws that might apply to them and how they can comply with those. Cathie did mention we do have access points into Asic to have discussions around some of these issues. But ultimately, regardless of whether the particular crypto offering or digital asset offering that is being provided is whether it fits within the regulatory perimeter of Asic as a financial product, there are ongoing laws specifically in relation to misleading and deceptive conduct that can apply. From an internal perspective, we have a number of ongoing work streams and discussion points with a variety of firms providing services in the digital asset space. Some of those are not within the regulatory perimeter, or it is a grey zone, and others, it may be a stronger argument that they are, and looking at the sorts of licensing requirements that might apply. What I would also say is that not all firms come knocking on the door. And so we do have a number of conversations we've been having with some providers, particularly where it's quite clear that the offering does fall within the definition of a financial product and providing a financial service. So, for example, providing derivatives products to a retail client base. And some of our discussions with the entities at this stage have resulted in either further clarification to Australian retail clients that they should not be accessing those products, but also next steps in making sure that those exposures do not increase, and in fact that they are decreased. Alternatively, the relevant firm can approach us for a more an AFSL, Australian Financial Services Licence, or even an Australian Market Licence. So we are having those ongoing discussions. From a coordination perspective, I did mention that there are a number of senior executives that essentially deal with crypto asset type issues across Asic, and that's because we're seeing a variety of different services and products. How they might be defined is up for discussion. So it could touch on our investment managers team that handles managed investment schemes. It could come into the market infrastructure team, which might have technology that is more market-like, or even clearing and settlement facilities. And then we have the provision of derivatives to retail clients on a principal basis, which then falls more into an Australian Financial Services Licence. So there are many teams potentially involved in there. And so we have a coordination piece we run across Asic to make sure that we're across what's coming through the door, the sorts of conversations that are occurring. And it is across existing regulated entities, but also entities that aren't necessarily, that are not licensed and maybe not as familiar with our regulatory framework. We do facilitate through some of the newer propositions, and Mark Adams might touch on this a bit further with the Innovation Hub work that we do. But I'll also just call out the Information Sheet 225, and we also issued Information Sheet 230, which is for our exchange traded products. And last year we took a view that there was, but we were approached by the market, the existing exchanges, but also providers of funds to provide access to crypto assets. And so we looked at building a regulatory framework by setting a consistent set of standards for market operators and fund managers for that to occur. So we packaged that up into the information sheet that provides guidance in that space. To ensure those ETPs, exchange traded products, maintain investor protections and Australia's fair, orderly, transparent markets, we issued good practice guidance in that info sheet that covers the admission and monitoring standards of the market operators, but also provided commentary on the custody of crypto assets, pricing methodologies, disclosure and risk management. We are continuing to work with the market operators, clearing and settlement facilities and the clearing participants and trading participants around the final admission of those products. And there is still due diligence occurring in that space. So I'll pause there. That just gives you a sense of what we're doing in some of the areas in Asic from a coordination point of view, and just pass on to Mark. Thank you.
Thanks, Nathan, and thanks, Cathie. And hi, everybody. I hope you're all well. And I'm Mark Adams. I, amongst other things, coordinate Asic's Innovation Hub function and have done so for about 7 years or so. And when that first started, I remember the little glint of the eye that came out with initial coin offerings, and maybe blockchain was coming out as a big topic at that moment 7 or 8 years ago. It quickly accelerated over time, and ICOs became a thing that everyone wanted to talk about. And then DLT took over from blockchain as terminology, and it is now part of the spice of many entities that come and want to talk to us about their business models. So just a quick reflection about over only a short period of time, how the terminology, business models, and potential applications of technology all change so quickly. And there's been a lot of regulatory engagement and response to those developments. So I wanted to probably just talk about two things. One was just highlighting a little bit of the international developments and its relevance, and then just coming back to approaching ASIC and working with ASIC with ideas or proposals that you may have in mind. So on the first topic on international, I think the important message on this is that it is an important backdrop to the settings within which businesses operate, within which policy questions get considered, and within which regulatory operational matters get considered. So I wanted to just dwell on some of the things going on there and how we're connected to them, to give you a sense of not only its importance, but how we are make use of that to inform us in our work that we do. So firstly, I think on the role of international as a backdrop, both for policy and operational purposes. Now, you'll be probably all pretty familiar that there are, perhaps for want of a better description, crypto assets which may more likely fit within the financial services and capital markets regime, and crypto that are less likely, or on their face are less clear. So for the first category, there's been a lot of work activity internationally with guidance such as the information sheets we referred to, where jurisdictions have put out a lot of explanation to try to indicate how their regimes work and engage with businesses, and really encouraging entities in that space to come forward and work within the system. And that's a bit of an international development on that front. But I think where it is less clear whether some crypto assets are financial products, this is where there's a lot of international focus at the moment. And at one end of the spectrum, I think stable coins and I suppose asset-backed crypto assets over fiat in particular. And so that subject area is grabbing a lot of attention in the context of payments and banking regulation, as well as sort of more institutional-like regulation. Now, there's a lot of dialogue and discussion going on, including in this jurisdiction. I think in this marketplace, you've seen papers around payments and stored value facilities. So expect more to be seen on that in due course on that subject area or that part of the spectrum. Then if I take a move from stablecoins with an asset backed over fiat, how have jurisdictions responded to this and where are things at? At one end of the spectrum is anti-money laundering and counter-terrorism financing. And really, across the board, most mainstream jurisdictions have a form of regulation that's been adjusted and reflects crypto asset-like business models, in particular fiat to crypto asset business models being within the regulation. And that's how it happened here in Australia, and AUSTRAC administers that. Now, beyond that, I think there's been lots of papers and propositions put out around what other sort of regulation should apply. And I think that's an important backdrop for the Australian consideration here and for people thinking about making submissions to the policy discussion. That as a spectrum has included propositions such as working with add-ons to the AML-CTF regime with additional obligations and requirements for entities registering under those requirements beyond perhaps the base level that would apply. Other forms of that include applying versions of financial services and markets regimes to some of these business approaches. And more recently in UK, there's been the application of the financial promotions regime for quite a range of crypto assets which may not traditionally be seen as financial services or products. So there's a spectrum of responses there. I think the important one to remember now is USA. And I'm sure you're quite familiar about the White House statements more recently. I mean, USA has been in the place, been in thinking about this topic, but I think it's now quite clear that they are going to take quite a leadership role, and they're not only monitoring developments, they plan to commission reports within a short time frame, and they've highlighted how important it is for them to be active and playing an important role on the international front. So I think that is a space for everybody to watch. Where will USA go and what sort of approach will they take? So I think I just wanted to draw that to everyone's attention about the importance of those international developments. Clearly, there's operational developments too. I know you'll be familiar with that. And again, North America has made quite a lot of interventions in certain areas, and there may well be analogies which are relevant here. So I just ask you to and urge you to just bear in mind and keep in mind those operational developments internationally as well, because they're good pointers to what kind of issues may be relevant, including in Australia. Then I suppose I wanted to just mention international standard setting bodies. So the Financial Stability Board is a body that has international standard setting bodies across various sectors, including securities and capital markets and banking and insurance. And it's more recently been monitoring and issuing papers about concerns about financial stability risks that may emerge in relation to crypto asset activities. So I would urge you to look at that territory and what views and perspectives are coming out there. They have quite an agenda to look more deeply at that topic through this coming financial year. And our Reserve Bank of Australia is probably, and Treasury, the leading entities representing Australia on that. The International Organisation of Securities Commissions that Cathie mentioned earlier, Asic is a member of, and it intends to provide a perspective to that work of Financial Stability Board. So they have more recently just confirmed a new working group on crypto assets with a view to provide a capital markets perspective to that work of the FSB. And we will be a member of that working group and wish to be an active contributor to the insights and observations that go into that. The second area that IOSCO has been focusing on is decentralized finance. And I would urge you to look out to a paper that will be coming out from IOSCO in the coming weeks, I believe, on that topic. It was a piece of work led by the USA SEC, and it's sort of a reference piece. I think the important thing about it is again, capital markets regulators trying to reflect their perspective of decentralized finance and how it may relate to existing frameworks or not, and what kind of factors are relevant for consideration in developments of decentralized finance, including the parties involved, how things are set up, what's the substance of what's being proposed, and so on. And there will be more work at an IOSCO level looking at decentralized finance. But I think look out for that important piece. We contributed to it. And again, I think it's an important reference to the ongoing dialogue on these topics, including at an international level. So I wanted to mention those to you. One last thing on the international is a body called the Global Financial Innovation Network. It has about 70 regulators across sectors in it, and it has a bit of a focus on RegTech. And in our work on Innovation Hub and at Asic, we have an interest in RegTech and use of SuperTech too. And I think GFIN wishes to look a bit further at the potential of regulatory technology to assist in the provision of services by crypto business models. So it's only early days looking at that, but I just wanted to indicate the interest in those sort of technologies as well, serving good outcomes in the use of technology. Now, just quickly about engaging with Asic, and Cathie and Nathan have both touched on this. Now, the Innovation Hub, its primary purpose was to help startups and small scale-ups navigate the regulatory system by making available senior Asic staff to give pointers. And over the 8 years or so that it's been operating, we've done that to now over 670 businesses. Now, as I say, it is about pointers and it's about helping them navigate the system. And our model is to try to do that in a way that balances both trying to promote innovation in financial services and the good outcomes that can deliver, but as well being true to the fundamentals of market integrity and consumer protection in the laws that we administer. I think what Cathie and Nathan have also referred to more recently is that there are clearly more substantive and established businesses now with footprints either growing in their approaches into crypto asset marketplaces and services. And I think the expectation is that those businesses do as much homework and take as much advice as possible so that they are well prepared when they engage with Asic. And I suspect it's not going to be those pointer-like discussions with the Innovation Hub. It's going to be with the business units within Asic that those dialogues will happen. And being as well prepared and having the advice in place, I think, is an important message to you in engaging with Asic in where you're in that context. So I think that's the other important message I wanted to say. As I said earlier, we are still seeing lots of businesses knock on the door with early ideas about using crypto technologies, distributed ledger technology in fintech, in regtech. Sometimes just wanting to clarify, are we in a totally different world and space? Who else should we be talking to? So that's the kind of thing the Innovation Hub assistance can help startups and scale-ups with. So I think with that, I probably just will conclude there that, technology and its applications is exciting. And, we're in that constant balancing act and we do that in many ways. And as my colleagues have said, be as well prepared, take advice and engage with us in the best ways that you can, including our business units. So thank you, Cathie and Nathan.
And I guess a couple of questions that occurred to me that people might be interested in from our discussion. One was probably quite a basic question, but we've sort of highlighted to people, particularly people who are developing crypto asset investment products, the likelihood that they may be within the financial services legal regime. And I just wanted to go back to basics. Nathan, if a firm is within our regime, what does that regime require of it? What is the basic things that are required?
Well, so the basic things that are required will depend on where that service fits into the regulatory perimeter. And if we think about a market, for example, which is a digital platform for buyers and sellers to meet and to exchange, then the firm is going to need to look through a range of issues there. For example, the fair, orderly, transparent nature of the market. But then if it is more of an AFSL regime, so providing services or even financial advice to clients on the products, then a range of consumer protection obligations start to come into play. And we like to capture these things under treating your clients efficiently, honestly, and fairly. There are a range of mechanisms put in place to provide those consumer protections. We have the design and distribution of the product. So that's taking into account what clients are you targeting and what do they need. And that results in having what we call a target market determination. But there are also other protections that can be in place. We would expect there to be internal dispute resolution mechanisms, funding in case clients need to be made good, and a range of other factors there. I might just see if Mark wants to supplement any of that.
Thanks, Nathan. So I think probably just in the AFL space, I suppose I'd probably just add in, there's normally conduct and disclosure obligations, and there's themes of that will depend on the nature of your service. So for instance, if you're doing financial advice, there'll be best interest duties and other obligations that apply. And there's clearly disclosure obligations about your nature of your service, not to be misleading or deceptive. And then I suppose I think of client money, depending on whether that's applicable to the nature of the business that you're offering. And related to that, I suppose, is custody. And custody is another big theme. There will also be financial requirements, depending on the nature of business. So they're just some other categories of the buckets of the AFSL regime.
And I guess, so it sounds like the key thing is just first of all to work out whether or not you fall within the regime. If you do, whether or not you need a licence, whether because you're conducting a market or because you're providing a financial service. And I must admit, I've always been quite proud of our robust regulatory regime in Australia and taken a view and that actually being licensed under that regime is a valuable business asset. And I suspect you've just outlined why it is a valuable business asset, because there's a number of expectations then that are required. At least at my experience at Asic, if you get it wrong and don't get a license, also that's an offence, and it can be that the transactions you enter into can be set aside. So I do think that we're pretty keen on people engaging with the regime. We think it's really valuable for people to come within the ambit rather than to try and construct affairs in a very complex way to stay outside of the ambit of the regime. Nathan, you were talking about the exchange traded products and our information sheet there, and I guess I've read with some interest some press reports about various proposed exchange traded products that may relate to crypto assets. Could you just sketch out for people sort of what ASIC's role in the process is, and what typically with an exchange traded product is the process that market operators would go to, just so because I guess I get the impression there might be a view that once we've done our bit about giving some guidance, that everything instantly happens the next day. So I was just wondering if you could sketch that out.
Yes. So the market operators will have obligations they need to comply with. When we first started receiving interest and applications in a draft sense that firms wanted to quote a product on an exchange, on a licensed exchange, we saw that there was the potential for differing standards to potentially be applied in some of the areas I mentioned earlier. pricing methodologies, etc., and the like. So that's why we, as Asic as an organisation, decided to consult for a set of standard criteria. So at least there were some elements there that were standard between the various market operators that might want to quote these products. But because the market operator has its own obligations it needs to meet, it is actually going through a process of testing those with the funds that want to bring their product to market. So in most instances, our expectation is that and I'll just say fund managers, would approach the market operator with their product, then work through a process of what they need to be essentially accepted by the market operator to meet those minimum criteria. Now, the market operator can do this through a few different ways, but they would normally, if they need to, make operating rule changes. And just a little sense of what happens there, if there's an operating rule change at a market operator, because of the nature of the financial service there, that does come through to the minister or ASIC delegates to go through what we call non-disallowance, which means we do have the ability to disallow those operating rule changes if we need to. So there is a check and balance to the regulator when a market operator is making changes. But if we assume that those changes have gone through and we now have a set of criteria that fund managers need to meet, they will have that conversation with market operators. We have another process, even where those rules are in place, that we may get novel products coming through. And as you can imagine, the crypto asset space is more on the novel side and how you might want to apply these minimum characteristics. So the market operators will engage in a discussion with ASIC at a certain point when they have a final or near to final application. And then we'll work through with the market operator. Potentially, it does need to involve the fund manager, but our direct line is really to the market operator to make sure that we're comfortable, the rules are set out, meet this, that from a regulatory point of view, we're also comfortable. But at the end of the day, it's the market operator making this decision. It's just that with such an innovative area as exchange products have been over probably the last 5 years to a decade, it has required a bit more of a discussion and dialogue between the market operators and ASIC on an ongoing basis. And what we saw with this last year was that if there's demand for retail clients to have access to a set of crypto assets, then potentially this is the way that they might want to access that market. And although we are not putting protections around the crypto asset per se, there is a regulatory framework in how you're accessing or obtaining exposure to those assets. So that's what the ETP, Exchange Traded Product Framework, gives you. The issuers themselves, the managed funds, do need to go through, they do need to, if they're running a managed investment scheme, do need to register those with ASIC. So there's a process there to register those funds with ASIC, and we are aware of several that are in the unlisted space, providing or looking to provide exposure to wholesale and or retail clients. So there are a few items in there, but there's a lot of dialogue that occurs around these things to make sure that the products are suitable to go live on a licensed exchange. Just on that, I did make a point earlier on, we haven't had any go live just at this point in time on the exchanges. There's still a process being run through by the market operators, clearinghouse, trading participants and clearing participants. So that's underway, and that's being dealt with more out of the market operator and clearinghouse side of things.
Thanks, Nathan. And Mark, you took us through the veritable alphabet soup of international organisations who are looking at crypto assets and their place in the broader regulatory regime. I wondered how can participants in the Australian crypto asset ecosystem sort of contribute into those discussions at an international level? what's the best way?
That's a very good question, Cathie. So I think I suppose it depends on what the international body does in terms of opening up propositions and even national jurisdictions. So let me give you some examples. So the DeFi paper that I mentioned that's coming out from IOSCO, it will invite comment. And it will invite comment from industry to tell IOSCO where we've got it wrong. It's really a validation exercise because the paper doesn't actually have any proposals. It's more about a reference piece. So I think there's an opportunity for the Australian marketplace to make sure that bodies like IOSCO don't have the wrong footing. And if there's something they want to clarify, confirm, bring to their attention, just engage.
And that's the same, I must, sorry to interrupt, but just to say, it's the same with the retail market conduct report that I referred to. It's a consultation report. So they're interested in hearing if they've got, that IOSCO's interested in hearing if they've got something wrong in that as well, and if perhaps there's a perspective they've missed, and it's open for responses now. The report is publicly available, and I think the responses are to May 21 or towards the end of May in the event. So that's another example.
Indeed. I think the only thing I'd probably add, Cathie, is that, I mean, we are in regular dialogue with a number of industry associations. So we meet and chat with Steve Vallis regularly. So we will bring to his attention things that are coming out. So to make sure that the industry here is aware where there are those opportunities to engage in international dialogue and consultations. I take that on myself to make sure that we don't miss out bringing that to the attention of the industry here.
Thanks, Mark. And I guess, Nathan, I just thought it might be useful. I raised in my remarks the fact that Asic also regulates, can regulate new technologies to the extent they interact with the financial system. And I just wondered, I know that there has been some discussion this week from the market operators. I wondered if you might just sort of highlight how Asic is involved in reviewing the ASX settlements plan to utilise distributed ledger technology in its settlement system.
Sure, thanks, Cathie. So we do have, I've mentioned before, some broad regulatory obligations around having adequate risk management and adequate technological, human, financial resources. But a lot of things flow out of those obligations. And we have a very close and continuous supervision approach with ASX, for example. They're a very large and important provider of financial services in the Australian marketplace. And the replacement of CHESS is a particularly large project. There's a lot of press and media on that. It seems like it's almost daily, but an important component of that is the new technology that they're bringing to market. I think even if it wasn't DLT based, we would still have a very strong supervision approach with ASX, but the fact that it is really brought it maybe more into the general dialogue in ASIC, but also across the industry, because it was quite early days when that announcement was made. I'm thinking back 5-6 years ago now. And in relation to that piece of work, we have, which is public, entered into a range of arrangements with ASX through license conditions, which put a sense of a framework around what we would like to achieve with ASX there. And we are looking at a safe and timely implementation approach with ASX in this space. And we are learning, as is everyone else, on how you would apply these technologies to that kind of application. What I'd say is it isn't necessarily, it's not fully open and transparent and permissionless to all of the data in there because of the nature of that data. So it's a different application of the technology than what we might see in other ways. But there's a very strong, open, ongoing dialogue with Asics around the CHESS implementation. I would say we're also seeing a range of firms approach us, not only in the market infrastructure space, but in other avenues of applying these new technologies to service offerings. And it presents an interesting suite of questions for us. And, you know, part of the Treasury consultation needs to think about those. If you have real-time settlement, you then have a look at, well, what are the, there's no clearing necessarily required, but there are other risks that potentially need to be managed. So it does pose a lot of very interesting questions for us, and looking at how the financial system has built up over time into its current form.
Thanks, Nathan. And probably, Mark, we should go to you for a bit of the last word. I can't believe the Innovation Hub has been going for more than 5 years now. You almost wonder if you're allowed to call yourself an Innovation Hub when you've been that established. But I was just wondering if you could reflect for the people listening on some of you mentioned it in your remarks, but some of the themes particularly you're seeing and sort of whether there are any sort of common issues that you think people developing new investment products that are based on emerging technology should be thinking about.
Thanks, Cathie. So I suppose quickly over that duration, it's well over 5 years. It's been 8 years it's been operating. And I gave a little bit of a story earlier. I mean, at the outset, payments, credit. Payments is it's a continuum. It's there are plenty of businesses seeing opportunities for business models in the payment sector, including, I'll put inverted words, crypto assets in that context too. I don't want to get into the definition of whether they're money or not, but nevertheless facilitating some form of payments. And so that remains an ongoing theme and is a bit of a constant. And entities in that space thinking about what kind of services they're delivering to who, where are they in that infrastructure? Are they delivering financial services of a payments kind to retail and wholesale clients is a bit of a constant theme. And that also part of the role of the hub is connecting people with other agencies. So, that's another constant theme. We have strong networks with APRA, AUSTRAC, and the Reserve Bank and make use of those where that's relevant. I think, going back, there was a lot of peer-to-peer. And so that was marketplace lending, crowdsourced funding. And you could perhaps say that theme continues in the context of decentralized finance, sort of facilitating a version of peer-to-peer interaction. So I think that's another interesting concept. And peer-to-peer raises questions about the underlying infrastructure, for want of a better word. And that's a common question that comes up. What is it? What's the nature of that? Who's behind it? And then I think questions about the actual service and counterparties, and whether counterparties themselves could well be providing a financial service. And so that question comes up often, and that is a bit of a continuum as well to the territory we're in. There's also been a lot of interest in digital financial advice. That's slowed a little. I think the question mark there is the capacities of AI and machine learning to accommodate perhaps complex scenarios and risk appetites of businesses, but that area is still a territory. Credit is always an area of interest, which has been ongoing. But I think I've mentioned a couple of constant themes, but I suppose what is really amazing for Australia is that over that time, it's still over 100 entities per year wanting to talk to us. And there's a lot of research like Ernst & Young's message about the maturing of the sector. There are still people passionate about wanting to make the use of the opportunities of technology. And I think that's an amazing, wonderful thing. And hopefully the hub can play a role in helping them. And DLT remains a constant theme. People have all sorts of aspects and operational questions around that. we don't regulate the technology. It's more about what is the service that's provided on top of that or making use of that, which is a common theme that comes up in conversation still today. So that's a little bit of a storyline of the bit of the history and ongoing common themes in the work of the Innovation Hub.
Oh, thanks, Mark. That's a nice way to end, I think. Thank you very much, everyone who's listened, and also many thanks, Blockchain Australia, for sponsoring such a terrific week of conversations on digital assets. It's been really informative, and I think the three of us are grateful to be able to participate in it. So thank you.